Welcome to EnglishCast. I'm your host. Today, we'll dive into the philosophy of speculation, sharing valuable insights from stock market expert Castellani. Whether you're a beginner investor or an experienced speculator, there's something here for you to think about. Let's step into the world of speculation and enjoy today's show.
Today, we're going on a mission to kind of decode the mind of Andre Castellani.
Oh, yeah.
This legendary figure in finance. He's often called the German Warren Buffett.
Yeah, and for good reason. He wasn't just like successful.
Right.
He had like a really unique way of looking at the market that went like way beyond,
Beyond the
spreadsheets and algorithms and all that.
Exactly, yeah. We've got some fascinating source material for this deep dive, a set of his quotes that were translated from a YouTube video,
Okay.
plus some notes summarizing his core ideas.
Cool.
You know what I'm really curious about is this.
What's that?
Castellani retired from stock trading at 35?
Wow.
Like, what was his secret? How did he do that?
Well, it definitely wasn't like a get-rich-quick scheme.
Yeah.
He actually said that like most people just totally misunderstand how the market works.
Okay.
They focus on like the price, the news.
Yeah.
But Castellani,
Right.
he was obsessed with the why.
So he wasn't just chasing profits. He was trying to, understand the deeper forces at play.
Exactly.
Yeah.
Yeah, and that led him to this core belief that speculation is an art, not a science.
Interesting.
He saw the market as this like living, breathing entity,
Yeah.
influenced by, emotions, psychology, and even a little touch of luck.
That's so interesting. I've always kind of thought of the market as this, cold calculating machine.
Right.
But he's seeing it as something much more human and nuanced.
Exactly, yeah. He even said the stock prices will never be equal to the actual value of the company.
Yeah.
Otherwise, there would be no stock exchanges.
Wow.
So he believed that if everything was just based on pure logic and data,
Right.
there would be no opportunity for speculation, no chance to outsmart the crowd.
So it's about understanding those moments when the market kind of deviates from pure logic and when emotions and psychology kind of take over.
Yeah.
But how do you actually capitalize on those moments? Did he have a specific strategy for that?
Yeah, he did. He called it the 4 pillars of successful speculation.
Okay, I like it. What are they?
Money ideas, patience, and luck.
Okay, let's break those down.
Sure.
So money seems pretty straightforward.
Yeah.
You need capital to invest, but what did he mean by ideas?
Yeah, so Castellani believed that ideas are what separate the speculator from the gambler.
Okay.
It's not about insider information or hot tips.
Right.
It's about developing a deep understanding of broader trends
Okay.
and kind of anticipating how events might impact the market and spotting those undervalued assets that other people overlook.
So it's about connecting the dots, seeing the bigger picture,
Yeah.
and thinking differently
Exactly.
from the crowd.
He was all about, developing your own independent judgment, doing your own research, and not just following the herd.
Okay.
He had a very strong opinion about this. He said, don't believe other people's opinions. It's your gamble. Do your own analysis, no matter what other sources of information are available.
Wow, that's pretty bold. He's basically saying you can't outsource your thinking when it comes to investing. You have to own your decisions.
Right.
But even with money and ideas, you still need patience, right?
Oh, absolutely.
The market doesn't always move on our timeline.
No, it does not. He was very adamant about that. He said, patience may be the most important thing in the stock exchange.
Interesting.
Castellani, saw so many people jumping in and out of positions just based on fear or greed,
Yeah.
and they often ended up losing in the long run.
Right.
He believed that true success comes from having the discipline to wait for the right moment, to let your investments play out, and to not get rattled by those short-term fluctuations.
That makes a lot of sense.
Yeah.
It's about being able to control your emotions
Yeah,
and resist those impulsive urges to buy or sell just based on fear or hype.
exactly. Yeah.
Yeah.
He understood that the market is a master manipulator.
Oh, yeah.
It's constantly playing on our emotions,
Yeah.
tempting us with quick gains, scaring us with sudden drops.
Mhm.
But he believed that if you can master your own psychology,
Yeah.
you can turn those emotional swings to your advantage.
Okay, I'm starting to see how all of this ties together, but what about luck?
Yeah.
Even with the money, the ideas, the patience, it seems like there's always an element of chance in the market.
Sure.
Did Castellani just dismiss that?
Well, not exactly.
Okay.
He recognized that, luck does play a role, but he also believed that you could kind of make your own luck
Okay.
by being prepared, by doing your research, and just by staying adaptable.
So it's not about just passively hoping for the best.
Right.
but about putting yourself in a position to benefit when those lucky breaks come along.
Exactly, yeah.
Yeah.
And this leads us to one of his most memorable analogies.
Okay.
He compared the relationship between fundamentals and stock prices to a master and his dog.
Okay, now I'm really intrigued.
Okay.
How does that work?
Okay, so think of it this way.
Okay.
The dog representing stock prices runs ahead, lags behind, wanders erratically.
Huh.
But it's always ultimately tethered to the master, representing the underlying value of the company.
Ah, I see. So he's basically saying that even though the stock prices can fluctuate wildly in the short term and, driven by all sorts of irrational behavior,
Yeah.
in the long run, they will eventually reflect the company's true worth.
Exactly. It's saying don't get too caught up in that day-to-day noise.
Right.
Focus on the fundamentals, do your research, let the market's short-term mood swings just play out.
So it's not about trying to outsmart the market on a daily basis, but about understanding those bigger forces at play
Right.
and positioning yourself for long-term success. It's like he's saying, don't try to be the dog, be the master.
I love that. I think Castellani would approve of that interpretation.
So we've talked about his background, his belief that speculation is an art,
Oh.
and his 4 pillars for success. But how do we actually apply these ideas in the real world?
Yeah, that's where things get really interesting, and that's what we'll explore in part 2 of our deep dive into the mind of Andre Castellani.
Ooh, stay tuned, folks. We're just getting started.
Welcome back to our deep dive into the mind of Andre Castellani. In the first part, we explored his 4 pillars of successful speculation: money ideas, patience, and luck.
Right.
But Castellani also believed that to truly master the market, you need to understand something even more complex: human psychology.
Yeah, that makes sense. After all, it's people who are making the buying and selling decisions that are driving the market.
Precisely. He was fascinated by how emotions and biases and even crowd mentality could lead to irrational behavior in the market.
Oh, yeah.
He famously said, once you step into a casino or a stock market hall, even the most intelligent people leave their brains in the cloakroom.
Huh.
So he was really highlighting how emotions can just override logic, especially in those high-stakes situations like investing.
So how did Castellani suggest we navigate this emotional minefield? Did he have any advice for, dealing with the fear and the greed?
Well, he believed in cultivating what he called strong nerves and calmness. He really believed that successful speculators needed to be able to detach themselves emotionally from their investments.
Yeah, that sounds incredibly difficult, though, especially when you see your portfolio swinging wildly up and down.
Sure.
Was he suggesting we become like emotionless robots?
Not at all. He understood that emotions are part of what make us human.
Right.
And, they can even be helpful in certain situations.
Sure.
But he believed that when it comes to investing, it's crucial to be aware of your emotional biases and to develop strategies for managing them.
So it's about finding that balance
Yeah.
between being passionate and engaged, but also being able to step back and make rational decisions even when things get heated.
Exactly. He was a big believer in independent thinking and not letting yourself get swept up in the hype or the panic of the crowd.
Okay.
He had this idea that the market is driven by 2 kinds of people: the stubborn investors who just stick to their convictions, and then the hesitant players who are constantly second-guessing themselves.
And who did he think came out on top?
He was very clear on that one.
Okay.
The winners are the stubborn ones. But he wasn't talking about just blind stubbornness.
Right.
He believed that, if you've done your research, you've developed your own independent judgment, and you believe in a company's long-term prospects, you need to have the courage to hold on to your position even when the market gets turbulent.
So it's not about being stubborn just for the sake of it, but about having a well-informed opinion and the courage to stick with it,
Right.
even when others are doubting you.
Exactly. He wasn't advocating for blind faith.
Yeah.
He believed in doing your homework, analyzing the fundamentals, and then trusting your judgment.
That makes a lot of sense. It's about filtering out the noise and focusing on the signals that actually matter.
And that's where his famous observation about fools and stocks comes in.
Okay.
He said, the key to seeing where the stock market cycle is currently is to see whether there are more fools than stocks or more stocks than fools.
Yeah, I remember that quote from our prep material. It always struck me as a bit cryptic, though. Can you break it down for us?
Okay, so he was talking about market sentiment.
Yeah.
When there are more fools than stocks, it means that everyone is overly optimistic and prices are likely inflated.
Okay.
Think of the dot-com bubble of the late 1990s.
Oh, yeah.
Investors were pouring money into internet companies with little regard for fundamentals.
Right.
That's a classic example of more fools than stocks.
Yeah.
And eventually that bubble burst and a lot of people lost a lot of money.
So Castellani was essentially saying that when you see that kind of irrational exuberance taking hold,
Yeah,
it's a sign that a correction might be coming.
exactly. And on the flip side, when there are more stocks than fools, it's a sign of like pessimism, fear,
Right.
and potentially undervalued assets.
Interesting.
Think about like the financial crisis of 2008.
Yeah.
People were panicking, selling everything.
Right.
Market crashed. But for those with a long-term perspective and the courage to buy when everyone else was selling,
Yeah.
there were incredible opportunities to be had.
So it's about understanding when the pendulum has swung too far in one direction,
Right.
whether it's towards euphoria or despair,
Yeah,
and then positioning yourself accordingly.
precisely. And that's where the art of speculation comes in.
Okay.
It's about being able to read the market's mood, anticipate shifts in sentiment, and make decisions that kind of go against the grain. But it's also about being able to control your own emotions, not getting swept up in the crowd's frenzy, and staying true to your own analysis.
That takes incredible discipline.
It does.
But even with all of this knowledge, Castellani acknowledged that losses are inevitable, right?
Absolutely. He was very candid about the fact that losses are just part of the game.
Okay.
He famously said, you can make money in the stock exchange, even a lot of money, but you can also lose money, a lot of money, and even go bankrupt.
Wow. That's a sobering thought. But he wasn't saying we should be reckless or gamble blindly, was he?
No, not at all. He was a strong advocate for risk management and having a clear strategy. He believed that you should never risk more than you can afford to lose, and you should always have a plan for how you'll handle losses when they inevitably occur.
Right.
He even said, never borrow money to speculate across borders.
So he was emphasizing the importance of protecting your capital.
Yes.
And not letting losses spiral out of control.
Exactly. And that's where his idea of the money magnet comes in.
Oh, okay. I'm intrigued. What is that?
He believed that money belongs to the fanatical pursuit of money. Now, he wasn't talking about greed
Okay.
or being obsessed with money for its own sake.
Right.
He was talking about having a certain level of passion drive and even an obsession with understanding how the market works.
Okay.
He believed that to be successful, you have to be committed. You have to really study and immerse yourself in the world of finance and be constantly learning and adapting.
So it's not enough to just like dabble in the market or
Right.
treat it as a hobby. You need to be all in.
Yeah, you really need to dedicate yourself to mastering this craft. But he also cautioned against letting that passion turn into recklessness.
Okay.
He said the money magnet must be obsessed with money as if he were a snake hypnotized by a magician, but he must keep a certain distance from money.
So you need to have that fire in your belly, that drive to succeed, but you also need to be able to step back,
Right.
analyze the situation objectively, and not let your emotions cloud your judgment.
Precisely. It's a delicate balance, but it's essential for long-term success in the market.
It sounds like Castellani was advocating for a very holistic approach to investing.
Yeah.
It's not just about crunching numbers or following trends,
Okay.
but about understanding yourself, understanding human psychology, and developing the discipline and the emotional control to navigate the ups and downs of the market.
That's a great way to summarize it. And that leads us to another crucial aspect of Castellani's philosophy, which we'll explore in part 3 of our deep dive.
Okay.
His insights on market cycles, technical analysis, and the impact of technology.
Stay tuned. Welcome back to the final part of our deep dive into the brilliant mind of Andre Castellani. We've uncovered his 4 pillars of successful speculation, explored the crucial role of psychology in the market, and learned about the importance of emotional control and independent thinking. Now let's wrap things up by exploring his views on market cycles, technical analysis, and the impact of technology.
Well, Castellani was a firm believer in the cyclical nature of markets. He famously said, ups and downs in the stock market are inseparable partners. So he saw booms and busts as like natural and inevitable parts of the market's rhythm, like
Yeah.
breathing in and breathing out.
So it's not about trying to avoid downturns altogether, but about understanding how to navigate them
Right.
and even profit from them.
Exactly, yeah. That must have been a pretty radical idea back in his day.
Yeah, for sure.
Many investors back then just focused solely on riding the waves of bull markets.
Right.
But Castellani, he saw opportunity in both sides of the cycle. He said, if you can't tell the end of the fall, you can't see the beginning of the rise. Similarly, if you can't tell the end of the rise, you can't predict the beginning of the fall. So he was all about recognizing those turning points, those moments when the pendulum swings too far in one direction and adjusting your strategy accordingly.
That reminds me of his fools and stocks analogy. Recognizing when there are more fools than stocks signals an overheated market, while more stocks than fools might point towards a buying opportunity.
Exactly. It's all about understanding those shifts in sentiment, those moments when fear or greed take hold and drive prices away from their fundamental value.
Right.
Castellani believed that recognizing these cycles was key to making smart investment decisions.
Speaking of making smart decisions, how did Castellani view technical analysis? Did he believe in using charts and indicators to predict market movements?
He was actually quite skeptical of purely technical approaches. He famously said, "For me, the technical situation is only related to one question: whose hands are the stocks in?" So he believed that understanding the motivations and behaviors of the players in the market was far more important than analyzing charts.
So charts and indicators could be helpful, but they were secondary to understanding the human element driving the market.
Exactly. He believed that technical analysis could be a useful tool for, confirming your insights or identifying potential entry and exit points, but it shouldn't be the driving force behind your decisions.
Right.
He was always reminding people that the market's not a machine. It's a collection of individuals making decisions based on their own hopes and fears and biases.
That makes a lot of sense. It's another example of how Castellani emphasized understanding the why behind market movements, not just the what.
Exactly. He believed that relying too heavily on technical indicators could lead to missing the bigger picture, the underlying fundamentals and the psychological forces at play.
This is all so fascinating. But Castellani passed away in 1999 before the rise of, high-frequency trading, algorithmic trading, and all the technological advancements we've seen in recent years.
No.
I'm curious, what do you think his take would be on how technology is shaping the markets today?
That's a great question. He was certainly aware of the potential for technology to kind of disrupt traditional approaches to investing.
Yeah.
He even said, any software is at best as smart as its programmer. So I think he would likely caution against blindly trusting algorithms or relying too heavily on technology without understanding its limitations.
Yeah.
He'd probably say that technology can be a powerful tool, but it's still just a tool.
Right.
The real key to success in the market lies in understanding human behavior, recognizing patterns, and making informed decisions based on your own analysis.
So even in the age of artificial intelligence and big data, his core principles of independent thinking, emotional control, and understanding market psychology remain as relevant as ever.
Absolutely. I think he would encourage investors to use technology to enhance their understanding, but not as a replacement for human judgment and intuition.
Yeah.
He'd probably remind us that behind every trade, every chart, every algorithm,
Right.
there are real people making decisions driven by emotions, biases, and beliefs.
That's such a powerful reminder. We can't forget the human element, even in a world increasingly dominated by technology.
Precisely. And I think Castellani would be thrilled to see how his ideas continue to resonate with investors today, helping them navigate the complexities of the market and achieve their financial goals.
Well, folks, there you have it. A deep dive into the mind of Andre Castellani, the German Warren Buffett, a man who saw the market as an art form, a puzzle to be solved, and a reflection of human nature itself.
From his 4 pillars of speculation to his profound understanding of market psychology, his wisdom offers timeless lessons for anyone looking to master the art of investing.
It's not just about picking stocks. It's about understanding the forces at play, both rational and irrational, that shape the market's movements.
As we always say here at The Deep Dive,
Knowledge is power.
the more you understand, the better equipped you are to navigate the complexities of the world, make informed decisions, and achieve your goals. So keep exploring, keep questioning, and keep that thirst for knowledge alive. Until next time, fellow deep divers.